So hello and welcome to the question number 3 of your June 2024 TX paper, which is very important, and question number 3 will carry 15 marks. So I'm not wasting much time, and I hope you have watched my question number 1 and 2 as well. Before moving on to question number 3, I have given so many instructions there, and I hope I do not need to repeat this here again. And so without wasting much time, I'm straight away going to the question. So the question will be given to you in the big screen. So the screen will be enlarged so that the question is visible clearly. Here we go. Right, okay. Identify delimited accounting periods throughout the period 1st May 2022 to 29th Feb 2024. So that is very important. They are asking the accounting periods. That is very important. So the accounting periods, and then calculate the taxable total profit. Yes, they are asking not the income tax liability but the taxable profits. So that is very important. And they calculate the amount of corporation tax that will save for the year ending if the three measures prior to 31st, taking three measures. Yes, very important. So make sure you understand. So first what they are asking, the accounting period. Okay, so the accounting periods that is available, and then make sure in this type of a question, I had said this in my previous videos as well, there can be three requirements and the entire scenario can be 2 pages. So the scenario will be too long and you don't need to worry. You don't need to get excited looking at this. Oh, what is this? No. There is a technique. What is the technique? Yes. The first requirement is always related to the first requirement. So the first scenario. So make sure these small concepts that you need to keep in mind. How this comes is by doing past papers, doing mock papers. If you have gone through my classes, if you have watched my recordings, if you have purchased my course, you would have done so many mock papers and you would have identified the pattern of the examiner. The examiner's pattern is, the first requirement, as I said, is always related to the first scenario, the top of your question. So the first scenario, and then they are asking the accounting period. Okay, now you may be wondering, there are two things. Okay, first the accounting period, and then period of account. These two are two different concepts. Okay, so the accounting period can never be more than 12 months. Okay, so remember, this is very important. Accounting period is where you pay your taxes. It cannot be more than 12 months. It can be less than 12, but it cannot be more than 12. It has to be either 12 or less than 12. But a period of account can be more than 12 months, can be less than 12 months. So remember the difference. So the examiner is asking you the accounting period. Okay, so what are the periods here? Yes, very important. From 30th September. So where did they start their business? Yes, 1st May 2022 to 30th September 2023. So that is very important. Okay, so this is the period that is mentioned here, 1st May 2022 to 30th September 2023. Okay, so in this accounting period you can take the first 12 months. Okay, so that is from 1st May 2022 to 30th of April 2023. So this is one accounting period, and then the next one, what is the next accounting period? Yes, from May 2023 to September 2023. So this is May 2023 . So this is May 2023 . So this is May 2023 to 30th September 2023. So this is very important. Okay, so this is the second period. What is, there is one more period, that is from October 2023, clearly given in the question, to 29th Feb. Okay, October 2023, that is 1st of October. So we'll give you 1st of October 2023 to 29th of Feb 2024. So this is another accounting period. So these 3 accounting periods is what the examiner is wanting you from. The requirement is, this is the requirement, and then the next question is the taxable profit. Okay, the examiner is asking for taxable profit and not the income tax liability. Why? That is because you need to keep in mind, and now you don't waste your time going to calculate the income tax liability. No, you only need to calculate the taxable income, that is the taxable profit. Okay, so sorry, and then we are moving on to your question where you are required to calculate the taxable profit, and this is very important, and where you start the question is something that you need to keep in mind. Yes, so make sure you write what the company name is and everything, and then we have to move on from the operating profits. Okay, so the operating profit, how much is the operating profit? Sorry, 612,000, the operating profit. And then first of all, what you need to do in this kind of a question, make sure you directly go to the adjustments. So the depreciation, yes, what you need to do, depreciation is never allowed in taxes. Depreciation is never allowed, so you have to add it back. Why? Depreciation is already reduced. If you have done the question, you would have understood. So the depreciation, you need to add it back. Why? This is not allowed and you have to add it back. So 612,900 is what is clearly given, and then 8,820. Yes, so that is the depreciation. You need to add it back, and then in place of depreciation, capital allowances is what will be available to you. And then QCD, qualifying charitable donations. So this is very important. You have to add it back here, and then you are going to reduce it at the end. So that is very important to understand. So this is 2,300. And then what else? Yes, leasing cost. Yes, 4,200. Why? That is because the carbon dioxide emissions is above 50 grams. How much is it? Yes, it is 124 grams. What is the rule? Yes, 15% of leasing is disallowed. Where have you learned this? Yes, chapter 3, chapter 4. If you have watched my recordings, if you have purchased my course, you would be able to understand why we are reducing this 15%. Okay, so 4,200, the leasing cost, 4,200, you get it, 15% you disallow. Yes, you have to disallow these expenses. So 4,200, you disallow 15% out of this. This will give you 630 pounds. Okay, and then moving on, entertaining, incurred 2,560 on entertaining cost, clearly given in the question. So entertaining clients, yes, and 75 on gifts of calendars, 7.5 each bearing the company name. These costs have been already been deducted in arriving at the profit. In arriving at this is already deducted. Yes, but now what you can do? Yes, 2,576 on entertaining clients. This is not allowed. Why? That is the rule. We have already learned this. Okay, entertaining clients, it is disallowed. How much is it? Yes, 2,576. You have to add it back. 2,576. Okay. And then what else? Yes, entertaining clients and 75 pounds gift. Yes, there are three conditions that you need to meet to be able to get this value. Yes. And then these three conditions, where have we learned? Chapter number 9, employment income. We have already learned this. So make sure you are clear with this. So gifts, this is allowed because this is meeting all these three conditions in the chapter number 9. So how much is the value? Yes, you don't need to do anything. Why? That is because this 75, the 75 is reduced in arriving at this amount. So there is no adjustment, any adjustment, but make sure you show this as 0. Okay. So what else? Yes, loan interest receivable. Okay. Now this is a bit of a complicated area, but make sure you listen to me carefully. Loan related area. Okay. Either it can be a loan interest income or loan interest payment. So in your taxes, you have to record this on an accrual basis. Okay. Where did you learn accrual basis? In your FA, in your knowledge level financial accounting, in your F7, which is the financial reporting. You would have learned what is accrual basis. If you have not done the knowledge level, if you have got any exemptions, you would have learned somewhere else. Yes. What is accrual basis in accounting? What is accrual basis? Yes. Even if you pay it or not, whatever that is relevant for that year, that should be recorded. Okay. So that is accrual basis. I am a tax tutor, not an accounting tutor right now. So, but that is the basic general knowledge that you need to have in order to do these questions effectively. Okay. So accrual basis, whatever the interest income or the interest payment, it has to be on accrual basis. What is relevant for that year, regardless of whether you have paid it or not, that doesn't matter. That is what the amount that is relevant for the year, you have to record it in this thing. So, and then interest payable. How much is the interest payable amount? Interest payable amount, it is clearly given 900. You can reduce this. Why are we reducing this? That is because at arriving at the operating profit, this is not reduced. So make sure you can reduce this. Okay. So this is a reduction. And then interest income. Okay. So the interest income, how much is the interest income? Clearly given. Non-trading purpose, the loan interest income 1,100. Yes, the 1,100, it is clearly given. Okay. Now we are moving on to the next adjustment, that is profit on disposal. Yes. Profit on disposal of freehold warehouse. Yes. Now, what is this? This person has sold the warehouse for how much? This person has sold the warehouse for 204,000. Okay. For 204,000. Okay. Now, what is the indexed cost? That is important. We need to identify. It is clearly given. The indexed cost. Okay. 108,800. So this is the index cost. And then how much is the value? 204,000 minus 108,800. Okay. So this is 95,200. Okay. So this is 95,200. And then what else? Yes. This person has made a claim to roll over the gain. Remember the rollover relief we have learned in chapter number 12, 13, 14. So those are the areas that we have learned about the reliefs. Yes. Against the replacement cost of a new freehold warehouse which was purchased on 6th January for 168,000. Yes. So 204,000 minus 168,000. How much is this value? 36,000. Am I correct? If you reduce this, is it 36,000? 204,000 minus 168,000. It is 36,000. Yes. Now what you need to do in this situation, you have to identify the lower value. Yes, the lower value. This is the lower value, and this is what has to be included as your chargeable gain. If this amount was lower, yes, because this amount is lower, you need to take it as the rollover. You can't take the entire amount, but this is your chargeable gain. This is your chargeable gain, CG. So make sure these are the small concepts that you have already learned in the capital gains tax. And if there is anything, do let me know. I will help you. Okay. So the chargeable gain. So the chargeable gain is 36,000. And then the next one, interest payable. We have already done this. Why? Yes, the interest payable in relation, the interest was 5,400 was paid on 31st January, okay? On an accrual of 4,500 have been provided for 1st January 2023. Yes. So now what they are asking, yes, this is very important. We have done this 900. Now how did we arrive at this? Yes. So the first 4,500, this was related to last year. But how much they have paid? Yes, 5,400. They have paid 5,400 in this year. This amount was related to the previous year. This amount is the paid amount. What is the amount that is related to the current year? Yes, the current year amount is 900. I'm explaining this again. This amount is related to the previous year. This is the amount paid during the year. What is the amount relevant for the year? 900. Yes, that is what we have done here. The amount that is related. Remember the accrual basis explanation that I gave? Yes, the accrual basis, the 900, the interest payable and the interest receivable, that should go on accrual basis, what is relevant for that year, and not on the payment, what is relevant for that year. So that is very important, simple. And then we are moving on to capital allowances. Purchased e-purchase and overhead crane for 220,000. The crane is a long life asset. So the long life asset, yes, crane, you can get the entire 220,000 100%. Why? The annual investment allowance, that is very important. So the 220,000, you can get the capital allowance. Okay, so that is very important. And then what else? Yes, purchase new car with carbon dioxide emissions of 25 grams. Yes, so the 30,000. Now this is related, what is this related to? Is it related to 18% or 6%? Yes, 18%. Why? This falls into main pool. Why? That is because the carbon dioxide emissions is less than 50 grams. If it is less than 50 grams, you have to make sure you put it in the main pool, getting 18% of capital allowances. So these small concepts are very important in you identifying this. So what this person has purchased is the car, and then the car was worth 30,000, and then you get 18% out of this, and this will give you 18% out of this will give you 5,400. This will give you 5,400, and then finally we are done. And then you can do this calculation. So 612,900 plus 8820 plus 2,300 plus 630 plus 2576 minus 900 plus 1,100 plus 36,000 minus 220,000 and minus 5,400, you can arrive at 438,026. Okay, 438,026. I am taking this here because there is not enough space. So 438,026. So this is something else. And then what else? Yes, the qualifying charitable donation. This is very important. You have to reduce this. This is the final value. So 2,300. I do not have enough space, and that is why I am reducing this and not writing the QCD. So make sure you will have in your CB platform there is enough space, so you can do this. And then minus 2,300 will give you 435,726. Okay, 435,726. So this is the final value. So trading, this is the taxable profit. So the examiner is asking this. You don't need to do the marginal relief, the 25%. You don't need to calculate the income tax liability, but the taxable profit is more than enough, and this is what the examiner is asking from you. And then the final question is, calculate the amount of corporation tax that F will save by taking 3 measures prior to 31st March 2024. Okay, prior to 31st March 2024. What is the amount that this person will save? Yes, F forecasts corporation tax liability for the year ending. So it is given in the question. Make sure you are reading the question. So 132,500. This is based on the forecast taxable total profit of 530,000. Because these figures are relatively higher compared to previous years, F plans to take 3 measures prior to the end of the company's accounting period. Okay, 4 new cars will be purchased for a total of 64,000. Okay, all cars are zero carbon dioxide emissions. How much is the tax that will be saved because of this? Yes, if it is zero carbon dioxide emissions, you will be getting the first year allowance. Make sure the 100% first year allowance you will be receiving. Okay, so the 4 new cars, you will be receiving 100% first year allowance. So if it is 64,000, you will be getting 25%. Why have I applied 25% here? That is because the taxable profit is more than 250,000. Okay, so there is a margin where you can reduce, either you can use 19% or 25%. We have learned this in chapter number 16. Okay, so this has to be 64,000 multiplied by 25%, and then finally you arrive at how much? Yes, 16,000 you will be saving. Okay, 16,000 you will be saving. This is a tax planning question. Make sure you understand. A dividend of 60,000 will be paid to the company's shareholders. Yes. Will this reduce taxes? No, this will not reduce taxes. Why? That is because dividends are paid out of post-tax profit. Okay, out of post-tax profit, dividends are paid. So this has no impact on your taxable income. And then rent of 18,000 covering the 6-month period from April to September 2024. Yes, we'll pay it in advance, but rent is always paid on an accrual basis. This is taxed on an accrual basis. So this also, number 3 also does not have any impact. So make sure these are the small concepts that you need to keep in mind. And I hope I have done a fair job in making you understand all the scenarios of this question 3. And we will be back with a new video in the future. Thank you so much.